Going live here to finish up the day. And of course, we're going to be watching Amazon's earnings as they come out and the reaction for essentially Amazon stock and the stock market as a whole. Because I got a couple of things we'll pull up. We'll talk about the weights and what's going to move based on Amazon. And then basically what's been going on the past day, right? Because ultimately we had a live yesterday. And realistically, we should have stayed on like an extra half hour because we missed Facebook's earnings, and then the market just tanked off of that because Facebook took a massive drop, which was pretty honestly, it was pretty impressive to see that. We saw Netflix and PayPal and we saw some pretty big drops across other stocks, but for the weights that Facebook has in the S&P and QQQ, it was pretty impressive to see that type of drop. So over 20+% drop. And then we even saw Snapchat, Spotify took a tumble off of actually beating on a bunch of categories. So, what I see right now is I believe we are in probably one of the most fearful market conditions in a long time. Realistically, I think, I don't want to say that we're going up, but I don't want to say that, we're going to go to lows. If I had to pick, you guys know I have long, so obviously I'm not betting on us going to 300 on SPY right now, right? So obviously I have long, so money is there. But at the end of the day, right, there's a lot of fear. And so the reality is now what is going to happen, and does this Amazon, I think this Amazon earnings is the biggest key for the near term, and this could put us past a lot of the fear, or it could be the opposite, and it could accelerate the fear. Now we'll see. Now, I want to pull up some weights. We'll talk about Amazon's projections. I have a little article pulling up here from Seeking Alpha. We'll talk about that. But I did want to pull up the weights of what Amazon is going to do in terms of the S&P, in terms of the QQQs. So let's pull it up. I got it on this screen. Let me pull it over onto my main screen here, and we'll be able to talk about it. Okay. So in terms of QQQ, this models the NASDAQ 100. So you can just buy a QQQ. You probably see they actually have a bunch of ads on TV, on CNBC. I've actually seen it on like football games and stuff. They're trying to, advertise to get you to invest in QQQ. I mean, if you, whatever, I guess for someone who's not interested or not really into the stock market, it kind of is a cool ad. Okay, I'll buy it, right? And, forget about it. But if we take a look at Apple, 11%, 11.6% weight in the Qs. If you look at Microsoft, 10% weight. Amazon, 6.76. So not the heaviest, but it's up there. It's pretty heavy. Now, Facebook, Meta, a 4.76. So we did see that this did bring some downside when Facebook came out and pulled back pretty hard. This brought some downside. But again, it's not like it's a 10% weight. If Microsoft or Apple had a 20% pullback, we'd be in a different situation right now. We really would, because those stocks have a lot heavier of a weight in the QQQs and then the S&P. So here's the S&P. And S&P, Apple has roughly a 7% weight, Microsoft a 6%. Amazon is number 3, though, with a 3.38. Okay, Google's up there, Google did well. And then we had, Facebook right here, Meta, just under a 2% weight. So Amazon comes in here on the S&P. It's going to have a bigger weight on the S&P, and it has a bigger weight in the QQQ. So Amazon's going to be pretty important today. It really is. Now, if we take a look at the S&P today, I had a line right here that we were kind of hovering on for a while, and then we kind of, finally flooded right through and broke down to the downside. Why is that? Well, roughly around 450 was our resistance point a couple days ago, really, back on earlier this week. Made the initial run on Monday, got up to that level at the close, kind of stuffed around at that level on Tuesday, and then eventually broke out, went higher. So that's a key area, and you got to give or take $1 or so. On SPY, it's not perfect. So I like to, if I was going to trade that, I would like to draw a box or a range. So if I'm looking at this box, I'm saying to myself, well, here's kind of the range that I want. Okay. SPY comes down into this range. I like it for a bounce. And that's what we got earlier today. The second or third time you come back into that range and keep testing lower, you're probably, you're asking for a breakdown to the downside at some point, unless we really show a ton of crazy strength, which we seem to do early on today. As we came down once, twice we bounced. So you really, there was really two good trades that you could have had off the 450 level. And then eventually the third time we came below and kind of consolidated, tried to kind of get back up, and then we pulled back. So this has to do with, I think, a lot of fear just in general. And we take a look at AMC. Not AMC. What was it? I mean, Amazon. We'll look at AMC later. Amazon AMZN. We'll dive into this. It's down almost 8% today. And this is what's really, I don't want to say concerning because who cares? But it's really interesting. It's more so interesting, right? Because if you look at Amazon, now Amazon was in this consolidation for a while. I can draw this, let's draw this trend channel. It was in this consolidation for a while where, it was trending up, but not too much. It really didn't do too much really after like the first few months of the post-pandemic run. You got to July, you got to the summer, and you kind of just chopped around. Yeah, you drifted higher, but you kind of just chopped around for like a year plus, okay? And now with the pressure, you're seeing Amazon breaking down the bottom of the range and breaking down pretty big to the downside. So from these highs, okay, let's just look at, from the highs, not even from the all-time highs, from the recent highs that we saw literally in mid-November, okay? Amazon is down, or now it's down over 25%. It was down roughly 30% almost from those highs. So it's down over 25% in a matter of, 2.5 months. That's pretty impressive. That's pretty big. And it's not like it's a small cap or a mid cap. It's Amazon. It's got a massive weight in the indices. So what's crazy to me is that this has pulled back so much ahead of earnings. So you had Facebook, you had Google, you had Apple, you had Microsoft. So a lot of the big names are, almost out of the way. We're almost there. We're almost through what's going to really matter in terms of earnings season. And then right now you have Amazon that everyone's like, I don't care. I'm selling this thing. I am dumping out of Amazon. Screw these earnings. I'm not holding through. Now, if they're bad and we don't meet expectations and potentially, miss by a good bit, who knows? We can see Amazon coming down, a good bit more. I mean, I wouldn't be surprised if we see Amazon. Where's that right now? I don't know if a 20% move like Facebook, but a 25% move like Facebook almost would bring you down towards $2,000 on Amazon. You'd be going down towards $2,000, which are levels that we have not seen or that we saw before the pandemic crash. So the pandemic peak, right, or the peak before the pandemic crash was actually right here at about 21, almost 2,200. So that could be a spot, which is roughly about 20% or so from where we are now. That could be, a target zone if we were to absolutely plummet. The problem is that we already got so much fear coming in. Everyone's, panicking the past 2 days, Facebook and everything, that I think that it's very possible that a lot of this move has been priced in. Yeah, could we get a move? I don't know if it's going to be that big. A lot of this move is priced in. And if you go to the option chain, let's just take a look at the option chain. So Amazon right now is at 27.76. Roughly speaking, right, they're pricing in from where we are right now. I mean, they're pricing in $100+ move on these options, which is nuts. I mean, they're talking almost like $120 move on Amazon, which let's do the math. $120, that's a lot, but at the end of the day, $120 if we do the math right here, which would be right here. So you need about a 4 to 5% move. The options are pricing at a 4 to 5% move. So if Amazon doesn't move up or down 4 to 5%, let's say you buy calls right now. If Amazon doesn't go 5% by tomorrow, those calls for this week are essentially going to be, you're going to either break even or you're going to lose money, depending upon the strike price you buy. So, or if you buy puts, same thing, downside. You need over 5% downside roughly. So would you be willing to take that bet? I think it's, with the current fear, it's not a terrible bet to take, but it's expensive on Amazon's options because it's not a cheap stock. And also you priced in a lot of this move. It would be funny if Amazon just sat flat by tomorrow. I don't know. We'll see how it goes, but that's kind of what's happening. And we'll dive into the expectations and stuff here in a second, but it's pretty wild. Loaded on QQQ puts. Let's look at QQQ. The thing that's funny too is that we fell through some levels. QQQ, we fell through the levels of, what was this? This level I had right here was last week's high from Wednesday before Powell. So we're coming into a range on QQQ that I kind of like down here, under 356 down to about 350 or so. And then of course it depends on, Amazon stuff. The only thing that I'm going to say too about this, and I'm not coming from I'm the perpetual bull or bear or any of that stuff, just trying to think about it, clean slate and try to be like realistic here. If let's say, right, Amazon comes out and it pulls back, or let's say Amazon beats, what happens tomorrow, what happens the rest of the week when a lot of the earnings are now past us and the Fed decision really that we're expecting rates isn't till March. So what happens between now and March? And we're ultimately expecting the Fed to raise rates in March. It's not like we're not expecting that. So what happens between now and March that is kind of something unexpected could happen? But a lot of the stuff people were kind of fearful of was the Fed, and now it was earnings season. A lot of that stuff is kind of passing through, or we're kind of, we're drifting through those things. And now it's like, okay, what's next? And so the market's always going to be looking at what's next. A lot of people are very, very fearful, and that's obviously, weighing on things. But ultimately, if we don't breach some of the highs, if we don't breach below like 350 on QQQ, or SPY doesn't come down and test last week's lows, it's very possible that in the next couple of weeks, after this kind of blows over, we could just drift around and potentially just drift higher, and we'll see how it goes. You got to be ready for both sides, and I think that there is a ton of bearish sentiment right now. It just kind of scrolling through Twitter and looking at social media, just getting a feel. It's so bearish that usually you don't see a crash or a huge downside in that type of environment. Usually you don't. You kind of see the big time downside when no one's expecting. Now you could see periods of time where we just kind of drift down because no one wants to buy. Yeah, for sure. But usually a crash, like a hard crash, you kind of need to be in a period where it's got to come out of nowhere. No one's expecting it. It's either euphoric or whatever. So that's kind of my at least anticipation for a crash. If we're going to see a true big time crash, it will kind of come out of nowhere. It won't be when everybody's loading puts. That's what I'm going to say. Skills destroyed today. It's just destroyed today again. Soon it will be a penny stock. Yeah, I mean that thing is nuts. We've been talking about it, but again, right? There's no reason to. There's reason to buy it if you believe in the stock, but for funds or for people just right now, like what's the reason to buy this thing? For a fund, if you're selling Amazon before their earnings because it's down, a lot off the highs and you don't want to be down more, why are you going to buy Skills? You know what I mean? Down 10% again today. This thing is getting killed. It's getting absolutely kicked to the curb and getting killed. I'm surprised. Let's look at XBI. I'm surprised that biotechs aren't getting more. They're down. They're honestly not as bad as they could have been. I was expecting biotechs to be down more, but XBI is not even down. It's hovering around $90. Under 85, then you're kind of getting down to the lows we saw back on last week. So that's what I'll be looking to add some more of, or at least another contract of my LABUs for a bounce on that. And so I've just been playing around a core. Penn had earnings today. Wasn't like terrible, but look at this. It's actually up. It hit up to $51. I was thinking about potentially getting rid of one of my contracts. I just didn't see it fast enough to be able to do it because I have 2 contracts out to 2023 on Penn. They announced $750 million in share buybacks. I mean, to be honest with you, revenue was up. I think they missed on EPS, and I haven't had a chance to dive like fully through that, which I'm going to do at least probably tonight or something like that. The whole earnings report and the call and all that stuff. But I saw the $750 in share buybacks, and I'm like, I mean, you talk about betting on yourself and believing in yourself. It's what you want to see, especially in times like this when your stock is down a lot. Now, hey, the market was so crazy and the stock was up a lot potentially because of some social media personalities that were helping, right? And, whatever, okay? The stock's coming back down. I like it a lot more than DraftKings personally in the sports betting space. And you're coming down to a point where right now the market cap on this thing is under $8 billion. And I like the numbers that they're seeing. I like the potential future growth here and buying back your shares. I mean, that's at least something that I want to see more of, honestly, for other stocks that I'm holding, to be honest. So you see that? That's a good sign. So there's no reason for me to sell that right now. And I think if we have some good green days in the market, if we do get a better bounce, this is going to be one that outperforms and probably gets back up to the low 50s. And I think it has a run in it up to the 60s if we can break that 52 or so area of resistance. We'll see, though. I got time on that one, just letting it do its thing for now. So here's SPY. It kind of pulled back through, and it kind of, started to consolidate down here just under 448. Now it's trying to pop back up. It's still down just like 2% here as we speak. All right. Thanks for the live report. I appreciate it. I mean, I like the lives more, to be honest, guys. They're more fun in terms of being able to see stuff live that's happening. I think we're going to be doing more of these going forward. All right, here's Amazon. I'm going to pull this up. We'll look through this really briefly, and then we'll hopefully talk about some other stuff. So all my FANG yesterday at open, mostly Google before earnings. I think a lot of people are scared. The problem is, though, is that a lot of people are in that same boat where they're all scared about what's going to happen. And no, I'm not saying that I don't want to fight the macroeconomic cycles and the macroeconomics. That obviously I think that we could, agree that, we're probably not, if we look at the history of the stock market, we look at where we are, we're probably not the best time to be buying and holding and at least, holding stuff. Obviously the market's rigged to the upside. So in our lifetime, we'll probably see higher highs. We can probably bet on we're going to see higher highs at some point. You go through periods of time. It could be, a pullback for a year. It could be, 5 years. Could be even 10 years after a pullback that you don't hit those highs again. But in our lifetime, you're going to hit higher highs at some point, and the better stocks are going to do very, very, very well in that time. But a lot of people are scared right now, and I don't knock anyone for going cash. I really don't. I think it's not a terrible idea to do. If you're worried, and that's fine. But my only concern about that is that in the short term, that worry, that fear, potentially could lead to missing out. And so I wouldn't be surprised if there is a run over the next few months before, we kind of see some bigger downside. I wouldn't be surprised, and it kind of catches everyone by surprise, and all of a sudden, everyone who was bearish is now bullish. And if you get caught up in that, just make sure you understand that, hey, 3 months ago, I was so bearish, I was all cash. Now I'm buying back in even higher than where these stocks were 3 months ago. Let me understand what I'm doing. Just take a second to think about it. I hope people understand that, and that's something we'll be talking about, obviously, if it happens for a while going forward. Okay, let's see. I want to pull up. So we're pulling up this Amazon little, summary going into the earnings. Everyone is on the edge of their seats. That is an understatement, and this came out 2 days ago, but the stock has come back big since that. So they're emphasizing their long-term priority is to optimize free cash flow. So pretty much by skimming through this, that's what this author is really looking for. And I think a lot of investors are looking for in terms of Amazon. So we'll see what happens in terms of that. Now, if we scroll down a little bit further and we look at what's kind of going on in the potential numbers we're seeing, if we keep going down, I'm going to pull these numbers up really quick. Lease accounting. Okay, cool. This is something that's worth definitely diving into. It's on Seeking Alpha if you just look into Amazon earnings expectations. So if we scroll on down, conclusions, final thoughts. I think this is kind of interesting to look at. So let's peek into this. FFC is adjusted for leases has turned to almost zero in 2021 quarter two, then negative. Whether free cash flow has turned positive or not after adjusted for its final leases will be key and a deciding factor for the market reactions on Thursday. Okay, valuation is substantially distorted on how it leases it. Okay, what I want to pull up too is I want to look at AMZN. Compare this to a couple stocks in terms of just there's some of the numbers. So Amazon's price to earnings is a 58.9. I just want to compare that to like an Apple. Okay. Apple's price to earnings is 31. Apple's price to sales is 7.34. If we dive into Amazon again right here, so Amazon was 58 on the price to earnings, and then the price to sales is a 3.24. Let's go back to Apple. Apple was at a price to sales of 7.3. So a little bit, Amazon's a little bit better in terms of price to sales, but again, price to sales isn't the full picture and the full story. Amazon's or Apple's market cap, we're looking at Apple right now. Apple's like this has come down a lot. It's $2.6 trillion market cap. It touched $3 trillion, then it pulled back. Amazon's market cap, let's look at that comparison right there. Amazon's market cap is actually lower. It's a just under $1.5 trillion market cap on Amazon. So you kind of see the weights. You look at the weights of what we were looking at earlier on QQQ and stuff. It kind of makes sense when you have a $3 trillion company, that's ahead of a 1.5 almost, and it's almost double the weight there on the Qs. And then if you look at the S&P, same thing. It's a 7% weight, whereas Amazon is a 3.3, a 3.4. So you kind of see that there's a pretty big difference in terms of that, but it's also kind of similar to the market cap. So market cap on Apple is roughly double, almost not perfectly, but it's kind of double Amazon's as of right now. So it's going to be cool to see. Now, we are very, very close to the lows of last week on Amazon. Let me go back to that. SPY is actually coming back a little bit here into the close. Amazon right here is pulling back a little bit too. So it's coming back up a little bit too, but we're very, very close to last week's lows. So look at these lows. Look at these wicks. We are in a spot right now on Amazon that we have found some buyers last week. So look at this. This range under about $2,800 has been a buy zone down to about $2,700. That was the lows of last week, just about $2,700. This is the area that we'll have to see if this holds up on, which with the volatility, I mean, it's very possible it does not hold up or we bounce right back off this level. Another thing to think about too is Amazon, their potential stock split. There's some rumors going around about Amazon potentially going for or looking to implement a stock split at some point in the future, similar to Google. I wouldn't be surprised. I would not be surprised. But if that doesn't happen and their numbers, and the reason why people like that is because generally stocks and historically stocks have run up in anticipation of a stock split and then potentially sell off after the split happens. So you have like Apple and Tesla as examples. When they announced splits, you had some pretty big runs into that split. Then the split happened and then things kind of calmed down for a little bit. Not perfectly, but that's kind of what you look at. And Google, I would expect, if the market's going to be the key, but we'll look at Google stock really quick. And I would expect something similar here. If Google can hold up, this probably can run to all-time highs and break out. Hit all-time highs on what was that, Tuesday? Tuesday. This could go, I could say, to 3,200. Very, very easily if the market stays firm in anticipation of that stock split coming in the summer months. Now, a lot has to happen. The market's got to stay firm. It's got to hold up into the summer, which who knows if that's going to happen. But that's kind of what you're looking at in terms of Google. Holding on up for that stock split. So that's kind of what I'm anticipating as an idea for Google. And if that split happens at $3,000, Google's going to be $150 per share post split. That's because it's a 20-for-1 split. So you divide the current price by 20, you get $150. And so we'll see what Amazon does. I mean, that's a pretty, they gave a lot of time on that Google split. Amazon split, if it happens, I'm curious to see if it would be, before Google's or after or around the same time. Google has a long time to theirs. Usually companies will give like 2 months or so, 1 to 2 months, 3 months. Amazon put like 5-6 months out in the distance in terms of that split time. So I don't know, something to think about. Scared for Snap earnings. I'm already down for. Here's the thing about Snap is that that's what I don't know. I understand being scared for it, but here's the thing about Snap is that they fill the gap. They're down. I mean, you priced in it. You're down 23%. You think that Snap is going to go down another 20% off these earnings? It's possible, but can they really go down another 20% off of earnings? It didn't even happen. So we're going to talk. We'll see that as it comes in too. It should be a lot of fun to see how these stocks react. Is they just bounce right back, or if the pricing in has been done, it's what we talk about a lot. Now I feel like we're just in a different environment though. It's just fear. So I don't know. But we've priced in when stocks make big runs up in anticipation of earnings, they're potentially pricing in good earnings before the earnings happens, and you can see sell-offs. In this market right now, we're seeing stocks pulling back huge, like Snapchat down 23% in anticipation of earnings. Now it's off the back of Facebook, but Meta, it's still that's the earnings didn't even happen. What if they got some crazy stuff going on? Like you don't even know. Like everyone's like, I don't care. I'm out. We're back to levels. You have to look back to October of 2020, even September of 2020 to get back to levels we're seeing on Snapchat, which is pretty impressive. I mean, honestly, to see us down this far, this fast, from literally being in November, being up here near all-time highs and many stocks at all-time highs, literally in November, and to be where they are now is nuts. I mean, Snapchat's pullback is nuts from back up for the all-time highs here in the fall, 83 down to 20, sub 25. You're down 70% on Snapchat. 70%. I'm curious if people actually use Snapchat. I mean, I have the app. I sometimes I'm not telling. It's definitely dying off, at least for me. But I know it was a thing when I was going through high school and stuff and college. It was pretty big. Lost 45% of my portfolio on Tesla, Nvidia, CRM, Facebook, and Spotify. I'm in a similar situation in terms of feeling the pain of the losses. But just not in those stocks. So it's like it's showing you now. It's like doesn't matter if you were in small caps 6 months ago and you kind of bled out. You felt the pain. Now it took a while, right? You kind of was a slow bleed. November was pretty bad to now, but you felt the pain. And now if if I was in small caps and I made the jump saying, you know what, screw small caps, I'm going to large caps. You just blew, you're getting, blown up there because now you took your money out of your loss in small caps, you went to large caps, and now they're finally feeling the effects. So you see how this kind of goes. It's like slowly but surely the dominoes eventually kind of fall over and they take over, and it ends up being the bigger names coming later on. Let's see. Let's pull up SPY again and look into how this is playing out. Yeah, so he came up into, gave us a little bounce, and it came up into this zone right here, which was prior support, became resistance, and now we're selling back off, at least for now, on SPY. Roblox holding on, support, strong. Let's look at Roblox compared to the market. It's actually holding up. I mean, it's still down 7%, right? But it's kind of holding up around $60. And if you go back to the left here, it's pretty much at the lows. I mean, it did dip down last week below the lows, all-time lows. But it's kind of hooked right here at this key spot. Now, another thing to think about too, not that I guess it really matters because who cares, but like maybe some people care. Some big trades we talked about from Pelosi's husband, Nancy Pelosi's husband, Roblox. He has $100 calls, by the way, out, I believe, to next year. So you're hugely out of the money. Okay, and he bought these like somewhere up in here in the 80s. He has CRM calls at 210. So and he bought these when it was up around 250. So he's down massive on those. Now it's in a good zone right here, CRM after the highs, but bought those. Disney. He bought Google. Google's actually doing pretty well. So, he's fine there on Google. But, on CRM, Salesforce and Roblox getting destroyed right now. So I'm curious to see how this stuff plays out. I think, big picture view, if I had to guess, big picture view, I think that, a lot of these stocks are coming down to very nice support zones and could be setting up for some reversals with time. But a lot of people are fearful, and that's kind of what happens at the bottom of some stocks. Not saying we're at the bottom of the market, we're not by no means, but at the bottom for some stocks, relatively speaking, that's when there's a lot of fear. And that's when, historically it's been great to be buying that fear. Tempted to add a little Affirm. Let's look at Affirm. AFRM. I like Affirm a lot for that bounce back trade idea, right? Now, it was really nice early this week. And it kind of got stuffed right at the trend line. So that's kind of your key level. But if a firm comes down, into the 50-ish range again, I like that a lot. And it probably, and it very well can, if Amazon sells off, they'll probably sell off a good bit tomorrow as well, or into tomorrow. So I would not be surprised there. Do you use Earning Whisper? No. If you're, I have not. I don't use Earnings Whisper personally. I have heard, and I know people who do use it though. Going to hold all my investments, although it's currently painful. Yeah, I agree with that until you believe that fundamentally there doesn't make sense to hold. Like, for example, I was thinking yesterday, I knew Penn had earnings today. And I'm like, hey, if I don't like these earnings and Penn sells off, I don't care if it's down 10%, 20%. If I don't like that, I'll take the L. I'll take it on the chin. I don't care. I'll move on. But from what I saw with the buybacks, and I'm like, I have no reason to get out of this again, right? If I get out of it now, and then the market firms up and that thing runs to 65, then I'm like, well, I just missed out on, whatever the gains would be, like 50% gains on my, option plays. So on my leaps. So it's like, okay, well, that's just stupid. I'm just selling the bottom. We'll see. Let's see. I wanted to pull up something else really quick. Let's pull up Ford. I think Ford has earnings today as well. Ford is sitting right here. Ford could be an interesting stock to watch for earnings as well, right? Because Ford, I kind of like where it's at. And in this zone, this consolidation that we had, a really long consolidation really from November through end of December, right? Was really nice. Then Ford popped up here at 25. Then it came right back down to $20, and it's hovering around 20 right now. But under $19 on Ford, we could be looking down to like $16.50 or so. That's the highs right here. This little mini gap right here down to $15.50. Ford could tank pretty hard on earnings. We'll see how that goes. And it's been a fairly strong stock despite kind of some of the market right now. Although it did pull back a good bit, it did, in relatively speaking, this year it's up a lot. So Ford is one that could be like an under the radar type of play for a downside if earnings aren't as good as people thought. Instead of playing like the obvious trade is like, okay, I'm going to go play Amazon. I'm going to go get shorts. I'm going to go get puts. I'm going to go get calls. The options are super expensive if you want to play that. But if you wanted to, right, that's the obvious, like where everyone's looking. Well, you can probably look at Ford, and this could be one of those that all of a sudden you wake up or you look at this thing after the earnings and it's like either it's up or it's down 25%. And you're like, oh shit, like I could have played Ford instead. So Ford right here is at $20, 25% on that. Now, I'm not sure why I'm saying 25% just seems to be like the number. Like PayPal and Facebook and like Netflix, all these stocks like are getting 20% haircuts off these earnings. So like it's kind of like, I guess, something to just think about. 20% on Ford takes you to like $16, the 200 moving average. So that could be a realistic target if we get a crazy washout on Ford down to 16. That would be a nuts. But I mean, relatively speaking, Ford's actually held up pretty well in this market and very, very well really since last year. So, I mean, maybe that's actually a valid trade. Now let's take a look at the options on Ford. If I bought puts on Ford right now at $20, and Ford, this could be an interesting lottery idea. If you bought $20 puts on Ford right here they're like less than $1. This, if Ford goes to 16, like potentially a 20% downside target, not would be a lot, but if it did, if Ford went to 16, these are worth $4 tomorrow. So honestly, it's not too bad for a risk reward, right? Risking less than $1 to potentially make $4 off of a crazy 20% drop. Now it's projecting a 20% drop, which is a lot, but I kind of like that risk. I like that risk reward better than Amazon, to be honest with you. And if Ford goes to $18, you double your money or even a little bit more. If Ford goes to 18. So, you don't even need a crazy move like that. Now, you get a crazy move if you got down to 16, but we'll see. Let us see. Oh yeah. So SPY, another option too, is if you wanted to play Amazon, play SPY or play QQQ. Like if you think Amazon's earnings are not going to be good, don't play Amazon puts or calls. Just go play QQQ or go play SPY. Like if you think Amazon's not going to be good, well then like we were talking about before, QQQ, Amazon is a 6%, almost 7% weight on the Qs, and it's about a 3% in SPY. So I'd play QQQ instead. But if you think it's not going to be good and you're like, well, how do I get access to some at least, access to that without having to pay that, how much the contracts are going to be and spend thousands of dollars on just a contract for Amazon only for that to potentially be worthless. Well, if you go to QQQ, let's pull up QQQ right now. Invesco QQQ, go to options for tomorrow, and you're looking at, let's say you go to like 350s or like 355s. If we drop to 350 tomorrow, these are going to be worth, $5. So you can make a few dollars on that. You can have a 350 to 5, type of move. I mean, it's possible that is a better option to play than the actual stock. But as we hit new lows on QQQ, right, by the way. Thoughts on Sens? I mean, it doesn't matter, honestly, because it's just the market right now is not great. I haven't looked deeper into them. Sorry, I'm messing up the ticker symbol. Sensonics, how's their chart? Well, they're up 3% today. They've actually had a nice little run. So they're actually doing better than, most small caps in this environment. You're up at a resistance kind of, the highest of the past few days. You're up right here towards like the $3 range is pretty decent resistance. And you have a bunch of indicators up here too. So we could see that being an area that it gets stuffed, but it's got some volume today. So, I mean, it's potentially, it's made a reversal of like, what is that? From 2 to 3, 50% off the lows. That's a pretty interesting stock to think about too, especially if the market firms up. This could be an outperformer by far. And it's been one that I remember we've been talking about for a while. We talk on and off. It comes on the radar. It comes off the radar. It's been one of those kind of small caps or penny stocks that, it's a 1.3 billion market cap, which is pretty surprising for the price, but, it's been one we talk. I mean, I don't have really a strong opinion other than, okay, the $3-ish range here is going to be your area to watch. We have this level right here at 340. That'll be, I guess, your next level, and then up towards 430 or some of these highs. There's something to watch in terms of that level, but if we can't hold that, then 250 could be a better spot for a dip buy. Kind of look at Ford for earnings. They would talk about Ford, Facebook. I have no idea. I think it could be very much I think Facebook could be very much similar to like PayPal. If you look at like Facebook today, it's just kind of selling off even more throughout the day, but the market's coming down too. PayPal is in a similar boat. So if we see more pressure tomorrow after Amazon and stuff, then, Facebook could easily just kind of pull back as well. But that could change, like with Amazon being good, and it could change like that. So sentiment, we'll have to see. So in terms of Ford, I just think it will be Boeing is doing really well today. Boeing is like, it was up. Now it's not, but it's strong relative. Yeah, building higher lows still throughout the day. It's holding view up right now. So Boeing could be a little pop trade into the end of the day. If the market kind of holds up. I don't know if the market will. My guess is that we might just sell off a little further into the close because everyone's so fearful of Amazon right now, and they don't want to have any long exposure right now, which is, understandable. I'm just guessing. I have no idea these earnings and how this stuff goes. I'm guessing if Ford beats, I would be very surprised. That's my guess. I'd be very surprised if Ford beats. So we'll see how this plays out. But, if you played $20 puts, I think that's what I'm going to probably do, honestly. Let's see. $20 puts are like 90 cents right now. Let's just do it. Let's do it for a lottery. Let's buy 2 of these. Scam calls coming through. Sorry about that. I'm going to buy 2 of these at like 90 cents. If I can get, I'll do 91 cents if I can get filled there. And this is just for tomorrow. This is like, I'm not saying it's like a lot. It's like a lottery play, but it's like almost like I believe this could be this has the setup for a pretty big drawdown type of move. It hasn't priced in a big move down. People are not looking here because everyone's looking at Amazon. So I think the Ford idea is better. So I'm going to buy $20 puts in the 90 area, which means if Ford drops to $19, I can, make money on the trade if Ford's at 19 tomorrow. So the low of the range is down towards 19, actually just under $19. So just playing it off the low of the range, that would be a good target. Now, obviously, very small size, $200 or so. It's like, okay, if Ford does go crazy, you make a few $100 and you move on, and that's it to the downside. But there's no need to kind of be like, okay, I got to go big and go home. Like, there's no like, okay, who cares on that? Let's see if I can modify this because I'm not going to get filled, at least as of right now. It's not letting me just cancel that and try to get in now because the market's pulling in a good bit. Let's just see if I can snag these guys really quick. Let's just grab 2 of them again at 92 puts for tomorrow. And it's just like a very short-term exit. It's just tomorrow's expiration. So it's like terrible. That's something you don't go in with very big size. But if you want to play with earnings, then there you go. And who knows? Things have changed pretty fast going into tomorrow morning. Things may look down, and all of a sudden you wake up tomorrow morning and the futures are up, and it's like, wait, what the heck? So I wouldn't be surprised. Lotto tomorrow for BABA. We're going to the moon. I mean, hey, I think BABA, Boeing's chart daily wise, it's back. It's really, I just got filled on the Ford. So we're in at 92 cents. So we need Ford at $19 tomorrow. And then we'll make money on that trade. But I'm still, this trend line is kind of not valid anymore because it's hasn't really respected it very well. But ultimately we can look at more of like a trend channel, I think is a better way to put it. Here's your channel. You're kind of in a downtrending channel on Boeing. So until you break above, really, you got to break over 230 on Boeing. Over 230, this thing I think can make a really big run. I think it still can and will at some point. The market's got to cooperate though. But that's the area that's really kind of key. That's the channel. The bottom of the channel here, which we came right down to, would have been great for calls down in the 180s. Pop right back up. Within a week, you're up in the 200s, and you could have been, locking in good money on that. Another play was TLT that I was just looking at earlier too. Look at this. Wow, that would have been really, really nice. I didn't take it, but I was looking at that for a little swing or even a day trade. TLT, these 141s for next week were like $1. They're actually a little less than $1 this morning. They're up like 50%. That's pretty good. And look, the reason why I like the TLT is because TLT has come down to like 140 or so, and it's bounced 3 times in the past couple of weeks at 140. So I drew this box. I drew the 1 hour chart, or I pulled the 1 hour chart up. I made this box and like, okay, here's the plan. Here's a strategy on this. Now I kind of missed the entry because I looked at it and it was not in my range. So I didn't take the position. Whatever it is, what it is. That's part of the game. But my kind of option strategy, if I have a bigger picture option trade, it's kind of a slower trade. It's not like, oh, I need to get in right now for a scalp. It's just either it's a swing or it could be a day trade or whatever, something like that, depending on how the setup is. I like to draw a box, a range, a zone, support zone or resistance zone if I'm getting puts. And I like to enter, when we enter that range, buy one, right? Or it could be depending on the contracts, how the price of them. You could buy 2, 10, 20, whatever. It doesn't matter. You buy one here. Middle of the range, you buy a second. Okay, so you add once, you add twice. Bottom of the range, you add 2. So if I was going to buy one contract, you buy one here. You buy one here in the middle of the range, which would be like 140. And then at the bottom of the range, 139.50, you add 2. So you get 4 contracts total, roughly. It depends. If you're obviously, it could be whatever. You get 4 contracts total, and then your average is like skewed to the bottom end of that range. And if you drop out of the range, quick stop loss, you're out. Who cares? No worries. No big deal. That's kind of the strategy that I like, that I've been implementing, or at least looking to implement more of on the option space. And I was looking to do that here. We just didn't get the exact zones, and that's part of it. Sometimes you miss it and whatever. That's why the second you enter the zone, I want to add one contract. The second you get into the zone, and then you can always add in the middle of the zone, then bottom of the zone. I think it's helpful. On slow. It's not for like a very fast moving. It's not very much of a fast paced or fast moving approach. It's more for a swing or a bigger picture view, whether it's like a 10-minute chart or a 5-minute chart or a 15-minute chart. In this case, we're looking at the hourly chart, so bigger picture charts. Do you think Snap will go down more? I have no idea, but I mean it's priced in a massive move down. I wouldn't be surprised if Snapchat. I don't know. I really don't know, because I'm curious to see how this plays out, because we could very well be in a situation where earnings aren't good. Yeah, you priced in a lot of downside already. Earnings aren't good and we just sell off more. Or if you come in at expectations roughly, well, you priced in so much downside, this might recover 10%, right? You have a nice move up. Same with Amazon, right? So I really don't know. Ford is the one we haven't priced much from movement. That's why I like Ford's chart. If you're gonna take a lottery trade, I kind of like the Ford play. So it's a risk, but it's it's a better risk, I think, than it's a cheaper risk, and it's not, worst case, it's not as bad as let's say you play Amazon or you play like a Snapchat or whatever. So that's what I'd say, at least. All right, we're getting closer and closer. We're 15 minutes away. Let's take a look at SPY. Now the market's setting up into the close, and are we rebounding? Yeah, we're just chopping around. We've been downtrending all day though on SPY, so kind of got a little bit of excitement earlier today. I tried to kind of balance off of being down in the after hours and opening up down like 1.5%, but pretty just slow bleed off the rest of the day. This is this downtrend we're dealing with right here on SPY. We got this zone right here though that we're watching, roughly like 450 or so is key. Now that'll be now strong resistance back to the upside if we do bounce back up on SPY. So that'll be key. It was a good area of support in the past because it was a good strong resistance a few days ago. Now it was kind of a bounce zone today early, and then it kind of slowly bled through. The thing is though, despite the downside we're seeing the past like day and a half, really ever since after hours yesterday, despite that, realistically, like we're not down that much. I mean, we hit 458 yesterday from yesterday's highs before Facebook's, whatever. On the S&P, we're down 2.5%. I mean, it's not that much. So I don't know how much more we could go. Amazon needs to dump 20% for us to probably have just a shot at coming into the top of last week's range, really, because that would be up around 440. So, I mean, $7 drop from here. We're down 10 bucks today. Yeah, if Amazon comes in and drops another 10% on earnings or something like that, then yeah, we'll probably come and test down to the top of, at least the top of last week's range. So here's the zone. Let's draw the zone in. So looking at like from 444 down to like 440 or even 439 or so is like your zone of prior resistance will become new support. So I can see us come down there, test that, and that could be the possible bounce zone. Or if we fall through there, we're probably coming down to the lows of last week, 426 and even 421. So those are key areas. Now we probably got a long way to go for that, 25 bucks or so on SPY to get down to those levels, but it's very possible in the next couple of days if we keep seeing this fear that we could see that. So we'll see how it goes. Let's want to pull up. I'll pull up Twitter, and we'll jump into once we get the official earnings and stuff, we'll just pull them up and we'll look into them. Here's the thing, though. The unfortunate, I don't really say unfortunate, but I guess I can just click on this right here. The part of this is that it doesn't matter. Like what doesn't matter here is the earnings. Like in a sense, it's the reaction that matters. So the earnings could be good, but if people want to sell that off, it is going to sell off and the market's going to sell off. So it's like it literally might not even matter. Like the earnings report might literally not matter, but whatever the reaction of that is, that's what matters the most. Obviously, that's how things work as it is anyway. NVNO, former HJLI. Okay, yeah, I remember that stock. Up 40% after market hours yesterday. Back to its yesterday's price, no news. Let's see, NVNO. What is going on here? Yeah, it had some, it looks like this was just a very weird, very few amount of shares that were traded up there for whatever reason. That's weird. Yeah, I have no idea. So looking back through, you have the time in sales goes back to this morning. So I don't know what happened yesterday, but it looks like there's very low volume, if anything. So you had 2 shares traded at 578, and then you had 900 shares that pulled down. So it was volume on 2 shares. So it's just, that's kind of what you get. Be in the after hours and pre-market hours, always look to volume. Because if there could be a crazy move, but there's no volume, it's who cares? By the way, though, this chart actually looks really nice. I mean, just looking at a small cap chart, I mean, this is a nice chart. We're right at $5, which was prior support in the past. I love that look. Now, I mean, small caps have got to prove themselves to some degree, but that chart looks really good risk reward wise. I like that a lot. Market cap on this guy is 50 mil. So let's look at, I'm actually curious of this guy on Finviz. NVNO. Float of 9 million. So super low float. Cash per share of about 6x 9. What's that? 6 times 9. So they got I can't do math. I guess you can say 6 times 10, 60. So just under $60 million in cash. So they're roughly the market cap in cash. So it's pretty good. But again, how much are they losing? And the key with these stocks, I think, is, and I'll probably make a video soon about the underlying big issue with penny stocks right now. And it very well could change. And I think it needs to change, or else we're going to see a lot of these things going under. A lot of delists, a lot of bankruptcies. It's coming, because if these things don't have cash and they're burning through cash, but they can't offer, the good news is a lot of stocks took advantage of 2020 and 2021. They did offerings, and they were like, okay, great. But if they don't have any cash to keep up, they're going to be in a tough spot, because if there's no volume, no one wants to buy their stock. Who's going to buy the offering, right? Who's going to fund them, right? That's the problem. So, well, that's something to think about for a lot of these penny stocks right now. What their revenues are. So the better ones to look at are the ones that at least have revenues, have decent numbers, have a lot of cash on hand, and have some promising products and whatnot. But that also sets the stage for some buyouts, because some of these things are getting down so low, you can be looking at some buyouts. Some bigger name pharma companies could be buying out the small guys, and so you can be looking at a lot of that in the coming weeks and months. I wouldn't be surprised if we're seeing some of that too. So you're going to have kind of both stories. Now, you very well could sell your stock if you don't believe in it, or you're getting worried, and then the next week you see a big company just bought out the company, and now you're like, well, yeah, I could have gotten out for a 60% premium or 100% premium from where I sold. Oh, it's part of the game, right? Let's see. Fib 618 feeling work from yesterday. That was nice. We talking about XCLA and Kala. XCLA, I'm not a huge fan. Someone said XCLA is down it's not down that much today. It's kind of, if it holds up, great. Market's got to help it out a little bit. If it holds up, great. And the key area really is a 75 level. If it holds over 75, that's not bad. Someone said that, they had Wall Street Bets came out with a $50 PT or price target. I mean, Come on, with that. And nothing against that. And if you want to believe that and get into it and get all turned around now, great. But let's be honest. No, first off, no one cares about Wall Street bets right now. Very little people care. The attention's gone. A lot of people are gone. And what is their authority in the space? Like, you know what I mean? Like, so there's just something to think about for them having any really big pull on that stuff. We'll see what happens, though. But just play the charts, play the setups. If it holds 75 cents, it could go to $1, and then we'll reconsider it at $1. All right, SPY, we're having a pretty big. I'm surprised to a degree. Based on this morning's action, midday, I thought we would have a day of just flat. It would be kind of like, okay, we're down because it'll be gap down, but it kind of would just flatten out at 450. We're not. We're dumping pretty decent right here on SPY into the close. So that play we were looking at earlier too, off of that little bounce back off this little attempted curl back to the upside after the flush out. This bounce right back up into the lows of earlier in the day was a really nice trade back to the downside, and it's working out really nice. I wouldn't want to hold anything into the after hours. If I'm bullish on Amazon, if I think Amazon's going to bounce, I buy SPY calls or I buy QQQ calls for tomorrow. If I'm bearish, I buy puts. That's just how I would do it on QQQ, not on the actual stock. The best we talked about the best risk reward for the earnings, I think, is forward, and we have 2 puts there just for fun. But that's the best risk reward I think for the earnings there. So risking $180 to maybe make a few $100 if we do get a crazy flush out. But will Amazon save the market? That's the key. Will Amazon save the market today? And I think that's how it's been. It's been like, okay, like last week, what was it? It was a Microsoft and it was Apple that kind of saved things. And now it's like, okay, here it is. Amazon, it's your turn. Can you do it or are you going to flush us out? So we shall see. All right. Dow down 1.5. NASDAQ down almost 4%. That's a lot. And the S&P down 2.5%. So we see 281 stocks hitting new lows, 96 hitting new highs. Decent amount, to be honest, given the conditions. 17% of stocks are actually up today versus 80% roughly are down. Top gainers, the top gainers are in the low 20% range. That is just atrocious. That's just disgusting. There's no action in small cap land. No one wants to buy anything. No one wants to play any momentum plays at all. It's honestly more interesting, like we talked about yesterday, it's more interesting over on the top losers, where you have more losers down over 20% than top gainers over 20% on the upside. And in that list, you have Snapchat and Facebook, 2 large caps, which is nuts. You don't see that type of stuff, honestly, very often. So, I mean, here we are, right? Here we are. This should be a very interesting. Now, CAL Kala, let's look at that. I feel like that stock is the one that I was looking at recently too. Today is not looking good because it had that little pop a couple days ago, right? But if it can develop a higher low, so if it doesn't drop below, let's say like 45 cents, maybe it holds 50 cents. This could be decent. Let's just give it. I would give it time. The longer this thing consolidates around 50 or even right around this level, the better. But just be careful though. It could be setting up for that next level squeeze out after. We talk about this all the time, and it's really important. So if you're looking for short squeeze stocks, right, let's understand this. If you're looking for a stock to short squeeze because it's got a high short interest, it's got this, it's got that, you're not going to get that at the bottom if there's no reason. You're going to get that after the stock runs and it allows the opportunity for more new shorts to get in. They get in, then the stock holds up. It doesn't die. Those shorts can't get out. They get stuck. Then your squeeze happens. That's what you want to look for. You're not going to get a short squeeze at the lows. If you do, you're waiting on a catalyst. You're waiting on something to happen to get the attention on the stock first to allow more shorts to come piling in. Then if those shorts are not able to take profits and lock in their gains and we end up flatlining or we kind of hold up higher lows, then they got to cover and get out because they don't want to get squeezed. They cover, they get out, adds buying volume. People start coming in, they notice the charts, boom, adds more buying volume, and then boom, you can go up to the upside. That's what you want to look for short squeeze. So this is a situation where you could be getting that, but today's little pullback, if you shorted this thing yesterday or even the day before, you could have gotten shorts up in the mid 60s or even above 60 cents, and now you're able to cover for a nice gain, 10+% gain, right? From some of these spikes yesterday. 10, 20%. So it allows shorts to get out of the trade, and it doesn't allow them to kind of get squeezed out of the trade in a sense of forcing them to cover back in. So that's one thing to watch on that front, personally. All right, well, we are getting very close to the Amazon report here. They have the conference call and stuff like way after, like an hour or two after. So that's one thing to watch too. From Microsoft had that play where Microsoft earnings come out, stock tanked, conference call comes out, stock rebounded really, really nice. So you could be looking at that too. It's not just because, okay, the earnings come out and it's over. It's not the end of the day. It's not the end of the world right there. NASDAQ 100 falls 4% in worst fall since 2020. Little stat that came out there. Interesting. Puts on pins. Pinterest is getting killed today, right? Pins. They have earnings, I believe, too, right? I mean, this thing is getting killed. Wow. Wow. This thing has been one of those stocks that gotten destroyed. Here, it filled the gap, so that's below the gap. It's just probably going to go even, who knows how low this thing is going to go. Let's see. Dogecoin, I have no care about Dogecoin, to be honest. I think if we see this continuation of fear in the stock market, it's gonna keep transferring over to crypto. I'm curious how Bitcoin's doing. It'll keep transferring over to crypto, and if it continues to do that, then Bitcoin's going sub 30. It's going probably down towards 20K, something like that. Who knows? At least that's what I would think, and maybe even lower in the coming months and maybe years. And so then I would imagine Doge gets killed with that. But the majority of the move there, I wouldn't want to short it or anything like that. The majority of the move there is, probably already happened on Dogecoin. So it could obviously go down a lot more, but with Bitcoin, but it's down a lot from where it was. So not a huge fan. You need crypto to be hot for that stuff to kind of work out. So very, very simple in my view is I would love to be buying Bitcoin and Ethereum if the market continues to get sold off and we see Bitcoin and Ethereum down, a lot lower than where they are now, cut in half from here. I would be loving to buy more of that. Just, not like I'm just going in like massive, like, no, not 100% of the net worth. Like people, but just buying more of it. That's it. Just buy more. And simply it's a game of playing the fear and greed, simply put. I'm actually curious of that. Let's look at the fear and greed index for the market, because this is kind of cool. All right, fear and greed from CNN Business. I just feel like, from what I can tell, this seems a little high. Just my feel. I feel like we're probably closer to like sub 25 in terms of this, in terms of more extreme fear. Just my take, but I mean, I guess we can see. We'll see what happens. I want to look at the put call ratio. Put call ratio. I wanted to pull up, not this. I want to pull the other side up just to get a visual representation of it. Are we looking better? Yeah, it's actually come down a touch from yesterday, but it's still, the trend is up on that. So, okay, it's interesting. Call and puts are generally elevated off that. We'll see. All right, so we'll be watching. Honestly, the best place to watch is watching Twitter for the Amazon earnings. When we get the Amazon earnings, we'll hit a link and we'll come to an article and we'll probably pop that up and get the official numbers and all that stuff. Option waves. This is kind of cool to see too. I mean, I don't know. This account I have no affiliation with, but I just seen it now. A $5,000 February 11th, 2022 call. Like, what even is that? Bid and ask is at 35 cents to get you, a massive out of the money call on Amazon. Would be insane. All right, we'll see what happens here now on Amazon earnings. We've got about a minute or so to go into the end of the day. Let's look at SPY. So everything bled off. The NASDAQ did pull almost 4%. It looks like it did. Look at SPY. It's getting a little, wow, look at this volume. Oh, I guess it's similar to yesterday too. Lots of volume coming into the close now on the S&P. So let's see. Our range, this box we have right here, are the highs of last week. So that would be an area of resistance last week that would become new support. So we're watching to see if we come back into that range and if that area potentially holds up as our support for now. We'll see. This is on the S&P. If Amazon comes out and kills it, this is going higher, because we know that this is going higher. This got a pretty hefty weight, 3% or so. Amazon's weight in the S&P, about 3.4%. Amazon's weight in the QQQs, 6.76. So here we go. We got 3 p.m. Oil is killing it today. Oil is killing it as of late, but that's up a lot though. Let's see what happens. Everyone's waiting for this Amazon. Well, actually, let's pull up Amazon's chart. and then we'll see what happens here on the S&P. It should happen pretty soon. Here's Amazon. So Amazon fell into this little range, which, what is this range from again? I forget. It's just the lows of this past week and a half. That's where Amazon is. All right, so let's see what happens. I mean, honestly, I don't even know. You want to usually you put the chart like this so you can kind of see more upside, but now we got to put this right in the middle because this could easily come down to we're saying potentially like 2,200 is like the level of where Amazon was pre-recovery or pandemic or whatever. I forget exactly when. Let us see. Oh, look at this. Amazon popping up. Again, the initial reaction may not be, it could be a fake out. Let's just get these numbers. Let's pull these numbers up and let's see what happens. So initially we're popping on Amazon for now. The numbers should be coming out any second. And then we'll pull up the article, we'll pull up the actual report numbers. Okay, let's see. And I'm curious how it's going to react to like a Facebook and how all those other stocks, Google, and how all the tech stocks will actually react to this when we get all this stuff. All right. Let's see. Oh my, Amazon's up 8% here in after hours as we speak, up over $3,000 a share now. We are popping up on Amazon as we speak. Let's see. We should get the number. This number should be coming out very, very soon. Okay, here we go. We're starting to get some, but I want to get a link. Someone's got to drop a link here. Here we go. There's one link. Let's get I want to get like a CNBC or like something official that we know is like legit. I don't want to get some random guy like posting some like BS article. All right, so we're getting some numbers coming in. We can probably honestly go to CNBC and pop this up because this is probably going to be easier to get the official numbers as they drop. Still nothing yet on CNBC. It should be any second though. All right, here's this. Pull these up, popping crazy off the earnings. Announce split. I'm seeing some rumors of announcing a split. Net sales below estimates for Q1. Monthly fee for Amazon is going to be going up from $12.99 to $14.99. EPS 27.75 up from $14.09 a year ago. And everyone's saying they're going to save. Okay, here we go. What is this? Net sales increased 9%. Operating income decreased compared to 6. Okay, net income increased to 14.3. Compared to 7.2 or 14.09 in the fourth quarter of 2020. So comparing to a year ago, we should get the official numbers and everything like that coming out of CNBC. I think that's probably the best place to get the numbers, at least as of now. But let's go back to the chart and see what the heck the stock is doing because it's popping up. Oh my gosh, look at this. Look, this is insane. Absolutely, look at this. It blew out of perspective of the entire day today. It's blown out of the highs of earlier this week on the market highs. It's just straight up. This is insane. Go to the hourly chart on Amazon. I mean, we are like, well, the stock is down a lot from its all-time highs. So we're getting back up there. We're at 3,200 right now. It's up 16%. That's a lot. 3,200 is pretty much filling all these gaps. It's back up towards the 50 SMA. Pretty nuts. That's nuts on Amazon. Back up towards the 50 SMA as we speak right now. Let's look at SPY, look at QQQ. So SPY right now in the after hours is up almost 1%. So SPY coming back pretty strong as we speak. Let's see. Let's go back to, I'm curious what's Ford doing? Ford down? Oh, Ford is ripping. So those are going to be worthless tomorrow. Those options that I played just as a guess, but who knows? Maybe that's just because Amazon's reaction right now. Let's go to QQQ, Invesco QQQ. This is up, 1.5%. It's getting back towards the highs of the day already. So see how quickly things have changed in just a matter of literally a few minutes after the close. We're 4 minutes after the close. Literally, that's it. All right, here we go. Here are the results. Okay, earnings per share of 27.75. Revenue comes in pretty much at the expectation. AWS revenue of 17.37 billion. Let's zoom in a little more and read a little bit deeper into this. Let's see. Analysts expect Amazon to record year-over-year revenue growth of just under 10%. I think we saw like 9% or something like that. Profits projected plunge to 3.68 from 14.09 per share a year ago. That's what they're projecting. Let's see if we get, here we go. Amazon earnings are out. Here are the numbers. Yeah, it's the same article we're just looking at. Okay, so this is nuts to see how this reaction is being taken right now. Amazon will take on several billions of dollars of extra costs in the fourth quarter because of headwinds. And this is what they said earlier, their operating profit could be as little as zero. The problem is, not the problem, the thing is this set the stage for like low expectations. And then when you set the expectations low, then you can be setting up for a big move. And that's kind of what it looks like we're getting right now. QQQ is up 1.5%. Let's go back to AMZN and see how this is setting up as we speak. Hit 32, over $3,200 a share, up 15%. Guys, that's pretty big because number one, this is potentially that last, I don't want to say it's the last, it's one of the last big stocks. Again, if we go back to the weights in the S&P, okay, Apple reported, Microsoft reported, Amazon reported, Google reported, Meta reported, Tesla reported, I think NVIDIA reported. I mean, these are the biggest weights. These are all stocks that they already reported. I think JP Morgan reported. So a lot of these names are gone. Visa reported. You get down to like, much lower weights in the S&P. QQQ, what else is important here that hasn't reported? I don't know if these last two stocks, AVGO and ADBE, have reported. They may have, but they have sub 2% weights, so it's a lot less of a move. The biggest names are all done in terms of earnings right now, so you may be looking at this potentially bottoming out for now. We'll see how this holds up, though. Here's the after hours top gainers on the right-hand side. It's funny how Pinterest is now up there as well. Look at Pins. Pins is ripping face as well. I'm curious how Facebook is looking, and all the ones that were sold off a lot yesterday. Facebook up a 1.5% in the after hours, not much. Snapchat up about 4% as we speak right now off that. What about PayPal, PYPL in the after hours, up about 1%. So nothing crazy across these names, but it's going to be interesting how tomorrow plays out and if we get that continuation type of move or what we get on some of these names if Amazon holds up and continues. All right, let's see. Go back to Amazon's chart. We're up around 31.4, so we're up 13% is nuts. That's nuts. Ford's popping up. I don't know if Ford reported yet, but Ford earnings are out here. The numbers. Let's see what Ford's numbers are looking at. EPS 26 cents versus a 45 cent expected, so it came in lower. Revenue came in just lower, barely though, not much. So they came in just under expectations, at least like on that front. Operating profit of $1.7 billion. Let's see. They lost $2.79 billion during that time frame on an adjusted basis. For analysts estimate for this year will earn between 1.54 and 2.35 per share. Revenue of 147.5 billion. Expectations were a little bit to the higher, kind of in line with expectations, and revenue more than expectations right there. So this is it. So Ford, let's see, Ford, I guess technically speaking, on the initial numbers, didn't technically beat. Okay, Ford's popping around up and down here. Ford may go end up kind of, just not doing much tomorrow. It's very possible that Ford bleeds out the option contracts for puts and calls, and everyone gets screwed who bought those today, and they're worthless tomorrow. Tons of time decay and volatility gets flushed through. So we'll see. But that's probably what's going to happen on Ford. I wouldn't be surprised if it opens tomorrow at like $20. Seems like the reaction is kind of mixed there, and numbers weren't like crazy up or down. So it's like, okay, whatever, no one cares. Everyone looking at Amazon though. It's funny. It's just funny. I mean, we'll see how if this holds up. There's no guarantee this holds up, and then maybe it ends up coming down sub 3,000. But I don't think it really matters. I think this kind of sets the stage for everyone to kind of chill out. Okay, it's over. Like chill out. Everyone who was saying Amazon into 2,000 and stuff, again, it priced a lot of the move down in. It seemed like, and they kind of prepared everyone almost in a sense on those earnings. It prepared everybody for not great numbers, Okay, big profit on gain on Rivian stake. Let's see if I can find that. Rivian stake. Let's see if I can find VIN. Is that all they got on Rivian? They didn't say anything else. They just said that they have a big profit on their stake. Yeah, because they're in from what their average can't be even remotely close to where the friggin' thing is trading and where it was, unless they sold. If they sold some over $100, I mean, they just locked in gains too, which is hilarious. It's really funny how the more money you have, the more influence you have, the more opportunities you get, and for those who are able to get in on like the Rivian IPO, sub IPO day, pre-IPO day. I mean, you could have, I don't know if you could have dumped in terms of if they have to lock up or what there's a lockup, whatever, but you're in some so low that even if there isn't, even if you didn't dump, you're up big on whatever what your average is probably, despite it pulling back a good bit as of late. Okay, so this is the numbers here for Amazon. Earnings per share of 27.75, revenue pretty much barely just missed, but pretty much right in line. Then they haven't come out yet with the earnings per share versus estimates as of yet. But they came out with the AWS revenue was a little bit higher than expectations. So AWS revenue came in a little bit higher, not by much, but a little bit higher. So a little beat there, slight miss on revenue expectations. EPS, we have yet to get the comparison to estimates, at least on this quick page. So it seems like, though, on the surface, Amazon is doing pretty well. It's up 12%. I mean, that's a lot. I mean, Google being up 7-8 when it popped was pretty good. It was pretty impressive. Amazon, I'm surprised, is going to be up, is up this much. I honestly am. Okay, 5% move, 10%, okay. Over 10% move. If this holds up, that's pretty impressive. And I also look at SPY. I'm curious to see how the sentiment kind of ends up tomorrow. SPY right back up here. SPY, again, though, where did SPY go? SPY right to 450, right to that prior area of interesting support today. Now resistance because we're below. So SPY right to 450. Let's look at QQQ. QQQ is up over 1%, but QQQ right to 355. It's 357 or so. This is a key level of support today. Also was the prior highs, the peak before Powell spoke last week on QQQ. So we're kind of hovering right around that level. So honestly, tomorrow could be a really interesting day because we're going to be kind of, if things hold up this way into the after hours, we'll see, they may not. We're going to be opening up, or we're right at some key zones on the S&P and on QQQ. So it should set the stage for next week. But I mean, to be honest with you guys, Shopify's up here. We'll look at some other stocks too in a second. To be honest with you guys, Twitter's up. I don't know. I mean, I now that a lot of this stuff is out of the way, in the very short term, it's very possible that we kind of just float higher on the overall markets. We'll see, but it's very possible we just kind of float higher. Because a lot of the fear may have been just washed out. Last week was pretty bad. This week after Facebook, it seemed pretty nasty. And everyone who kind of thought that this, little bounce won't hold is now potentially going to be retested next week if we come back and test those levels. Now we're not that far off, and Amazon earnings are out of the way, and Amazon didn't get destroyed. It's alive and well for now. So I mean, it's setting the stage for a bigger move up, and we'll see. I'm curious if we got any more interesting insight from Amazon, if people have some more insight here. Okay, so they came in, revenue was like right there with expecteds roughly. How many people went short? This is actually hilarious. How many people went short NQ, NASDAQ, essentially heading into Amazon? I agree that, and it's not something I would do. I mean, just if you're going to go short in anticipation of something, right? Check the sentiment. What's everybody else doing? If the stock is pricing it in, the stock pulled back, it priced it in. Now, the fear and all that stuff so far, every time the past couple of days has ended up, I don't want to say it's been wrong, but it seems like every time the market feels like it's hanging by a thread, it was Microsoft, it was Apple that saved it, and now it's Amazon, right? These big companies, the heaviest weights in the S&P, in the NASDAQ, are the biggest companies come through and they hold it up. They pop us right back. We're at support, we drop a little support, and boom, right back. And now we're holding up. I'm really curious to see how this plays out going forward, especially with now, as these earnings are getting pushed behind us. We generally see a time where everyone's focused on these earnings. So small caps, all that stuff gets killed, or it just gets kind of tossed to the wayside, no volume. So now, post-earnings season, what happens in small cap land? What happens now to people start kind of come back in? The market's not going to, if the market doesn't drop and doesn't get killed, what happens? The market doesn't have to go up. It just doesn't have to get destroyed. It just has to kind of sit flat, chop around for a while. What happens in small cap land? What happens to these large caps? And do they bounce, or do they kind of just, sit around and not do much and consolidate for a while? All right, let's look at Ford. Ford is dropping. I'm curious. Oh, wow, we're going to actually make money on that if Ford holds up. So I just bought two just to kind of play around with like $200. Two puts at $20. So essentially, for me to make money, I'd make a few dollars. I'd make like $20 if Ford opens at 19. Anything below 19 opening up on Ford, we're looking nice. So if Ford opens up below $19, I'm making money, and it's safe to say we're making a few bucks, and that's it. So that's nice. So there's the Ford. And I like that trade a lot better. I mean, again, right? Look at Ford's chart, right? Did Ford just price in a massive earnings debacle? No. Amazon was the focus. Everyone was looking at Amazon. Oh my gosh, this. Now, Ford, yeah, they're probably going to be like $2, these option contracts that I bought for 90 cents. So it's a double, a quick double. Now, it has to hold up. It may not. The market holding up strength, if Amazon stays up and, you know, the SPY, QQQ, if that holds up overnight, futures don't tumble and tank, then yeah, I mean, if that happens, Ford may kind of slowly kind of meander back up into the 19-ish range, and maybe those options end up not being a profitable trade. I don't know, but if I was going to take an option play off the earnings, now here's the thing: if Ford's earnings came out like they did today, and Amazon tanked or Amazon was flatlining, this would be a much bigger trade. So you're kind of fighting against the tide there. But if there was a bearish play to play, the Ford play made a lot more sense to me, as no one was looking there. No one was looking there again. Right. And it's just kind of how I like to play things. When everyone's looking over here, either you go against that idea, you know, which is risky, but it's also, I think, a better strategy, or you go find something else that no one's looking at. Okay. Amazon's up 14% here in after hours. Pinterest up 17, almost 18%. Snapchat. Oh my goodness. Holy sheesh. Look at this thing. Snapchat, by the way, I did buy just for fun. I bought like 100 shares just in the after hours yesterday. I set some sells that actually hit this morning in pre-market just for like an extra $1 move, which was great. Had I held that, I'd be up, a couple $100 on that trade. But, whatever, it is what it is. I didn't want to hold through the earnings. It wasn't the point. But look at that, Snapchat right back up. And guess what? It recovered the entire drop that we saw off the Facebook debacle scare, whatever. It recovered all of that. It's up 40%. Oh my God, that's a lot. It's back up to $35. That's resistance right now. $35 is your resistance on Snapchat. Let's look at this. Now, again, it's still early. These moves would have to hold up. It's possible that they don't hold up tomorrow. Who knows? Let's look at the option chain though on Snapchat. So if you were to buy a $25 call for Snapchat today, you could have bought a $25 call on Snapchat for less than $2.50. If Snapchat holds up at $34 a share, which is at right now, if it holds up to that level, that contract will be worth $9. So what's that? Almost a 3x or more than a 3x? More than a 3x on that play. That's awesome. So again, everyone was selling off. It was a but it was tough. Let's be honest, it was tough. Who wanted to buy that today? Who wanted to buy that fear? A lot of people were like, well, with the Amazon report, we don't know what's going to happen there. No one wanted to buy that. And now look what happened. Snapchat comes out. Let's look at if they got the numbers on CNBC here on Snapchat. Snap shows first ever quarterly net profit. Yeah, of course, that's what happens. Snapchat, that's the headline. Snapchat shows first ever quarterly net profit ever of all time. Like, this is not, of course, that's the news. You just see how, again, I wasn't playing Snapchat. I wasn't playing Amazon. I played Ford. There's no need to get caught up in the emotions is just insane. It's fun to watch, but there's no need to get caught up in the emotions. Let's be honest. And if you get caught up in the emotions, 9 times out of 10, you're probably going the wrong way. And you're probably letting your fear, you're probably letting your greed get a hold of you. And you see what happens and just how quickly things can snap back. Get it? Snapchat. All right. So let's look at these numbers. EPS comes in at 22 cents versus an expected 10 cents. So you killed that. Revenue comes in, not much, but they beat revenue by a little bit, 1.3 billion versus 1.2. Daily active users is up, surprisingly. Daily active users is up. I guess, my mom is now on Snapchat. So, I guess, you're getting the older generation is moving on. I don't know how much the younger generation is still on it, but, I guess, okay, whatever. So there you go. New users is up. Average revenue per user is up too, $4.06 versus a 3.79. So again, Snapchat comes out, beats every number, beats all these, they beat on earnings per share, they beat on revenue, they beat on daily active users, or at least they up that, or they up what the expectation was, and they beat on the average revenue per user. Every category, at least for here, there's other categories to look at too, but a lot of these big name categories we all like to look at to get that quick reaction, beat. Earnings again is always a very risky play. It's always very volatile. You never know what's going to happen, and you're playing because we don't have insider information. We have no idea. So what I like to do is you believe in the company, you buy it, the stock is down. If you believe in the growth story, you don't think it's going to go anywhere, you think it's going higher, you think that they're going to you think that their revenue is going higher, you believe the revenue will go higher, you have a thesis behind your trade, you buy and hold the stock, right? If you're going to jump around, be in and out, in and out, in and out, I mean, in the long term, it's not worth it. It's not worth it. Now, being more of an active trader or playing against the grain, there's opportunity there. But if you're going to be a buy and hold type of investor or trader, I mean, what are you doing? There's no need to be jumping in and out. Pick your couple stocks. Don't be in a million, or buy an index fund, and who cares? But if you want to play the individual stock route, you have your convictions, pick your stocks, and move on. And there's no need to kind of jump around and be freaking out about this. By the way, Amazon is now not only up, it's up 18%. So it's going higher. It just hit $3,300. Insane. Absolutely insane. You could have, right? People, you think, oh, you got to play options. You could have played shares. You could have just dumped in a decent chunk of shares into playing the earnings if you were bullish or bearish. Now, if you're bearish, you're down. But you're down, okay, you're down 18%. Big whoop, not the end of the world. But if you're bullish and you're right, you're up 18%. That's a killer trade. I mean, I'd take the 18% any day for an intraday trade. If I can lock in gains and make my 18%, that's nice intraday, right? That's beautiful. Even on a swing. I mean, that's pretty good. So that's nuts. You got that on Amazon, not even on, a small cap. You got that on Amazon. So honestly, guys, this is pretty impressive to see. But you see how like that, everything changes just like that. The sentiment shifts like that. Jeez, man. The amount of people who are bearish, it's just nothing. I have no problem with that. Like you can bet your way, but it's like I saw the writing on the wall last night, and today with the intraday action, you kind of saw the writing on the wall, and it makes sense. Now, by the way, the S&P is now up over that 450 level, that key level from today. 450 is now gone. We're above it. QQQ, where we got on QQQ, we're up. We're up almost 2%. So we were down 4% today on QQQ. Now we're going to gain back 2%, which is just nuts. That Snapchat move is nuts. I'm serious. That Snapchat move is absolutely insane. Snapchat is the number one gainer in the after hours, right? It is we have gone from a market where we used to trade small caps and penny stocks, and they were the crazy movers in the after hours. Oh, we got a 30%, or oh, we got a 25%. Oh, it's up 100%. Crazy. Right now, those stocks no one cares about because you can go make that with unlimited size. You have no risk of like these crazy offerings, these crazy manipulations up and down, low floats. No, screw low floats. Let's go buy up huge floats, but let's just play these like penny stocks. You got a 41% move on Snapchat right now. It's up. It hit $35. I think 35 is going to be your resistance point. That was the highs from earlier this week. So maybe that's honestly a good short idea right here on Snap, right here off of 35 down to like, a little pullback. Could be a decent idea. We could even possibly try that too. But I mean, still, I mean, that's insane. 40%. Pinterest up 25. Everyone hated Pinterest. Everyone wanted to, dump this thing off. Pinterest is going back over the highs that we saw earlier this week. Amazon is up over those highs by a decent amount, up now 16% in the after hours. So Amazon's highs from earlier this week in the pre-market hours going into, what was that, Wednesday? We were at just over 3,100. Now we're up to 32 and a little higher. We hit 33. Unity Software, that thing is climbing straight up here in the after hours. They must have had earnings. I'm imagining it went from 91.50 to 108 now. Insane. These are not cheap stocks that are literally the top gainer list, guys, are not stocks. These are stocks. The top gainer list. We don't see this. This is not normal. At least it hasn't been. Now, Firm is ripping too. I mean, everything's going. Twitter. Top gainers. A $35 stock. That was a $25 stock literally earlier today. A $200 stock. A $30 stock. A $100 stock. A $3,200 stock. That makes up the top 5% gainers today in the after hours. It's nuts. You don't see that. You don't see that very often. So if you think the volatility is gone, I mean, we're still going to get it. I mean, who knows? Now this could quiet down very, very, very much so over the coming sessions. I wouldn't be surprised because now the big names are behind us. The big movers of the market are behind us. Again, for those who are tuning in now who are just seeing, right, the biggest weights in the S&P, Apple, Microsoft, Amazon, top three. Those top three, by the way, all didn't tank on earnings. All actually held up very well with the earnings. So the top 3 companies in the S&P holding up is probably a good sign for the S&P in general, right? At least for now. Again, top holdings in the QQQs, same 3 companies, Apple, Microsoft, Amazon, and then Meta, Facebook. That's the number. Facebook and Tesla actually were 2 that didn't perform that well. Tesla's been super volatile. Who cares? I don't even count that because it's like it was down big, then it was back up, then it was down. Like who knows? But the top 3 weights were good, or at least held up well on earnings. And again, the potential future here, who knows? But for now, they're holding up. And if they hold up for now, that's going to hold the indices up for now until the next earnings cycle or until the Fed says something or does something or raises rates. So I think until March, from right now until March, we have a kind of a quieter period of time. Now, who knows? Maybe there's some Russia, who knows, right? I guess. But from right now to March, we kind of have a quiet period of time where it very much would not surprise me if we melt up or just grind higher on the overall market. It wouldn't surprise me. And it's going to take, maybe this is what kind of flips people back over to bullish in the short term. I don't know. But I think people are still going to be a little skeptical and whatnot. But out of this list here, out of the top 4, one of the 4 was down big. The other 3 were up. And they were up, not huge, but they were up good. And Amazon's up. I would say Amazon's up huge. As we speak, Amazon is up 16.5%. By the way, Unity Software is keeping up. It's at 112 now. That's over the highs, or roughly at the highs from earlier this week on Unity Soft. I mean, this is just nuts. These moves are nuts. I mean, you can even scalp this stuff in the after hours. I mean, for $2-3 on these stocks. I mean, unlimited size because you don't have to worry about, being in, I got too many shares or I don't have you can get as many shares as you want if you're a big time, trader if you're playing that. The problem with some of the small caps in these time frames is that, okay, the small caps, you buy a ton of shares, you can move the stock on a market buy or market sell or whatever. So it gets kind of a little bit crazy when you do that. And now it's like I kind of like the Snapchat short idea. To be honest, as weird as that sounds, it is up 40%. I mean, a pullback from right here to VWAP, a few bucks, it's a nice percentage gain, and you kind of got your resistance, or you kind of got your level at the highs. I kind of like that trade idea, to be honest, for just shares. It doesn't seem like it's super risky after already a 40% move, but then again, who knows? They just posted their first quarterly profit ever. So, I mean, Snapchat's going to be up here. It's still down a lot from where it was, but it's going to be up towards just above the highs of last week, at least as of right now, if it holds up at this level tomorrow's open. So we'll see if that holds up. This is nuts, though. Absolutely nuts. I'm going to definitely go live again tomorrow because we generally do Monday, Wednesday, Friday. But I figured today with how crazy yesterday was with Facebook, I was like, well, we're probably going to see more of that today. And we've got exactly that and more. We got a bigger move than I thought we probably would ever see on Amazon in a one-day frame, 16%. I mean, intraday, let's look at the movement, right? The thing opens up today at like just under 2,900. It pulls back about 4% intraday. In the after hours, this thing pops down. So from the lows of the after hours, right? Amazon pops from those lows up to $3,300, up 17% from those lows. I mean, it's just insane. So, I mean, nuts. Just wild stuff we're seeing across the board. Let's look at SPY. S&P is hovering up just over that 450 key level on the S&P. What else? QQQ, and then we'll wrap things up after QQQ. We're going to have, everything's going to change tomorrow, to be honest, because anything can happen overnight. And then realistically, will the continuation keep happening? That's the key. Will we get that continuation overnight in futures? If we don't, and we give back some of these gains, we're opening up at a more reasonable spot. Maybe we are. QQQ is up just shy of 2%. It's at 360. It closed the day at 353.55. It is at $360, 360 in the after hours right now. So nuts. And let's see how my Ford's doing. I don't know. I'm not like a huge, Ford's at 19. So we'll see. If Ford opens at 19, I'll make money on those puts, but I'm probably going to have to sell them right away at the open tomorrow because if the market's strong, Ford could bounce back a good bit. We'll see though. We shall see. But I appreciate you guys for tuning on in. Thanks so much for watching. All I ask is a thumbs up on the streams, on the videos. Stay tuned for future streams, future videos. We're going to do more of them. I like the streams a lot more, especially when stuff's happening. So today's moves across the board red, but after hours is a completely different story. So thanks so much for watching. Tomorrow should be the next, tomorrow the key is continuation or chop. And then that's the story for tomorrow. And we'll see how that plays out. Thanks so much. Hope everyone had a good day, and I'll see you guys in the next one.